Yo, welcome to the cool news. The cool news. Yo, I'm finally going live on Facebook. Let's hit it one time. Yeah, your boy's going live on Facebook, YouTube, Twitch. Welcome to the cool news. And today we talking about the big, beautiful bill, Trump's big, beautiful bill. A lot of people are talking about it. A lot of people are scared. They're talking about we going to take them to the Twilight Zone. Nah, that ain't where we going. No need to cry. I see a lot of people like, uh-oh, what is this bill gonna do? People talking about the skies falling. But yo, what we gonna do is we gonna break down this Trump's big, beautiful bill. A lot of people farting on it. But hey, man, look, we gonna see what this all about. I know people rolling their eyes and talking about not the big, beautiful bill, but yeah, this is it. So what we gonna do, I'm gonna play this video and I'm gonna walk y'all through it. We gonna go step by step with the Trump's beautiful, big, beautiful bill. I mean, the big boy. So let's jump in with no further ado. Let's go. Hey, and make sure y'all like, share, subscribe, whatever you gotta do, but we finna break down this bill. Let's get at it.
Passed, representing one of the largest tax cuts in U.S. history. This bill will lower tax rates, increase deductions, and create several incentives that will allow savvy taxpayers to greatly reduce their taxes. But there is a lot of confusion about what exactly has passed at this point, leaving many people wondering how this new bill will affect their wallets at the end of the day, or what they can do to benefit from this bill. So in this video, I'm going to give you a simple, straightforward, and no nonsense explanation of what to expect from this as a practicing CPA that helps people use the tax code to reduce their taxes every day at mycpacoach.com. If that sounds good to you, please hit the like button below, comment your thoughts as we go through this, and let's go ahead and dive in. Okay, so let's start with the provisions that will impact almost everyone watching this. Like number one, the permanent decrease to the individual tax rates. This is quite literally the most expensive provision in this tax bill, expecting to reduce government tax revenues by over $2 trillion over the next decade. Or in other words, this is putting $2 trillion back into our pockets.
Hey,
now, the 2017 tax cuts reduced several tax brackets, like the 39.6 bracket down to 37%, the 25% bracket down to 22%, and the 15% tax bracket down to just 12%. These tax rate reductions were originally temporary in nature and were set to expire at the end of 2025. But
Okay.
If you're a man over 30
So I mean,
who makes at least
150
grand a year and you're still embarrassed to take your shirt off at the pool, your number one priority should be to get shredded while you still can, because the longer you wait, the harder
to skip through there. But for now, we're gonna have to do it like this. But I push skip.
But this bill will make those reductions permanent. Now let's move on to number two, the permanent increase to the standard deduction, which 90% of taxpayers claim at this time. So the 2017 tax cuts more than doubled this deduction, but that temporary increase was also set to expire at the end of 2025. This bill not only extends this deduction, but it also makes it permanent. This change alone is projected to save taxpayers over $1 trillion over the next decade. It also makes temporary upgrades to the itemized deduction, which taxpayers can choose to take instead of the standard deduction when it is more beneficial for them. So prior to this bill passing, there was a lot of fuss about the SALT deduction, which allows people to write off their state and local taxes on their federal income tax return.
SALT, state and local tax deductions. Hey, look, this is what people have been talking about. All we heard before the election was Project 2025. So now this is what we got. Let's see if it's worth it. Let's see if it's not. But SALT, let's go.
Well, the 2017 tax cut capped those write-offs to just $10,000, which actually negatively impacted many taxpayers in high-tax states like New York, California, New Jersey, and so on. Because if you paid higher than $10,000 in state and local taxes or property taxes, then you were unable to write off more of those expenses on your tax returns. This bill temporarily increases the cap to $40,000 through the end of 2029, which will make the itemized deduction more beneficial beneficial for millions of taxpayers. But that's not the only temporary upgrade here. This bill will also allow taxpayers to write off up to $10,000 of their car loan interest on qualifying vehicles through the end of 2028.
Hold on,
now, this would only apply to newly purchased American-made cars and would be subject to income limitations depending on your filing status. And if you do qualify for this, you will be able to take this deduction even if you do not claim the itemized deduction. Also, if you have children, you may also benefit from the new child tax credit. This is another provision that was set to expire at the end of 2025, which would have caused the child tax credit to go from $2,000 down to just $1,000 per qualifying child. This bill extends this and increases the child tax credit to $2,200 per child, which is expected to save taxpayers nearly $800.
Y'all hear that? $2,200. So it actually went up. I think that's a good deal. Hey, I know y'all like those child tax credits. I ain't never got one, but hey, that sounds like a good deal to me. I don't see nowhere where the sky is falling. Let's keep going.
$100 billion in taxes over the next decade. Now, this credit will continue to phase out based on your income, starting at $200,000 for single taxpayers or $400,000 for married taxpayers. This bill also increases the senior tax deduction for individuals over the age of 65. Prior to this bill, seniors were only entitled to a $2,000 additional deduction or $3,200 if they filed with a qualifying spouse. This bill increases that deduction to $6,000 for each qualifying individual, which is subject to income limitations based on their filing status. But considering the fact that this bill fell short of delivering on the no tax on Social Security promise, this is the least they can do for seniors, in my personal opinion. Anyway, while we're speaking of no taxes, let's go ahead and address the no tax on overtime promise as well here. Now, despite the name, all overtime wages will not be exactly exempt from taxation. What this bill does is it allows certain individuals to take a deduction against their overtime wages, which will effectively result in no tax on that portion of their income up to certain limits anyway. This bill will grant single taxpayers up to a $12,500 deduction against their overtime wages and married individuals up to $25,000 of a deduction against those same wages. And this deduction will also be subject to income limitations as well, beginning to phase out for single taxpayers with over $150,000 in taxable income and over $300,000 for married taxpayers filing jointly. There are similar income limitations to the no tax on tips provisions in this bill as well. This bill allows a deduction against qualified tip income up to $25,000 and is subject to the same income limitations we just saw. And qualified tips, by the way, is defined as tips received in an occupation where an individual customarily and regularly receives tip income. This will apply to employees and certain business owners that provide hospitality services, personal care, transportation, and certain creative and retail services as well. However, specialized service trades or businesses do not qualify for this, like doctors, lawyers, accountants, dentists, or really any business where the reputation or skill of the provider is the main thing people are paying for. And speaking of businesses, let's go ahead and address some of the biggest tax provisions in this bill for them as well, like the permanent extension of the QBI deduction, which will literally save business owners billions in taxes over the next decade. So the QBI deduction was originally introduced in 2017, which granted qualifying business owners an immediate 20% deduction against their qualifying business income. For example, a business owner with $150,000 in qualifying income would get a $30,000 tax deduction to use against that income. And for individuals earning below a certain threshold of income, they would automatically qualify for this deduction as long as they had some form of self-employment income, whether it be through an S Corp, a partnership, a single member LLC, or an unincorporated business like a side gig, for instance. Then this deduction starts to phase out for certain types of higher income business owners with specialized trades or businesses. But not all business owners are actually subject to those income limitations. And prior to this bill, this provision was going to completely expire at the end of 2025, but this bill permanently extends this provision for good. Plus, it increases the income thresholds to qualify by $25,000 to $50,000 depending on your filing status, which will allow certain high income earners to qualify for this under the new rules where they did not under the old rules. Some business owners will also have opportunities to segment their business structure to qualify for this, which could essentially allow them to split some of their business income into a structure that does allow them to qualify for the QBI deduction as well. To learn more about that, just comment QBI in the comments below. Now, in addition to the QBI deduction, there's another big tax incentive in this bill for business owners, the permanent extension of bonus depreciation, which is huge. Bonus depreciation grants an additional tax deduction against tangible business or investment property, like vehicles, machinery, equipment, furniture, fixtures, tools, and even things like aircrafts and yachts. Prior to this bill passing, this deduction was limited to just 40% in 2025, but this bill increases this rate back up to 100% for all qualified purchases made after January 19th of 2025. This will allow many business owners and investors to make strategic purchases that may help them earn more income while reducing their taxes at the same exact time. At our firm, we have helped our clients use bonus depreciation rules to offset their taxes when buying businesses, certain parts of real estate, or vehicles they need to operate their trade or business. Now, these are just some of the major changes for business owners, but this bill will also permanently extend 100% R&D expensing as well, which will virtually allow any business that is developing or improving upon any product, process, technique, formula, or software to write off 100% of qualifying research and development expenses as opposed to receiving a partial deduction. It also permanently renews and enhances the Opportunity Zone tax credit, which has allowed investors to defer and avoid capital gains taxes when making investments into qualified Opportunity Zone funds. I will be creating several in-depth video guides that go into many of these tax provisions in greater detail, so make sure you subscribe to our channel to stay in the loop on those, and also drop a comment below and let me know which of these you're the most interested in learning more about. Also, if you need help implementing some of these strategies and your CPA is not helping you plan around these type of things, just apply to work with my team today at mycpacoach.com. Thank you for watching.
All right, there you go. You know, he broke down a big, beautiful bill. I don't see where everybody afraid of. I'm thinking of, you know, y'all talking about Project 2025, the sky is falling, everything is going to be crazy, people going to be running around. The big, beautiful bill sound good to me. I would just, you know, I'm thinking if maybe Obama or Kamala Harris or somebody would have dropped the big, beautiful bill, it would have been something y'all liked. But I guess since it was Trump, it was a problem. But hey, we just saw the big, beautiful bill broken down. Hey, and I found a Black American to do it too. So, hey, y'all just rock with it. It look like it's still going to be tax credits. Some people are even going to be getting even more money. So, big, beautiful bill, we out. Hey, make sure y'all like, share, subscribe.